Hello everyone, very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be continuing to work with the awesome oscillator. So this is basically the second part of the ongoing series which we started yesterday. And I hope you are well familiar with this awesome oscillator, which is a momentum indicator and it tries to reflect the precise changes in the underlying driving force for the instrument of our choice, and it will help us identify the trend and the reversal of the trend whenever it is going to take place. Before we go into the details, this is a standard disclaimer, and I would like to remind you that this is simply a tutorial session, and whatever algorithms which we will be developing during the sessions are simply for the tutorial purpose, and no claim is being made regarding the profitability or otherwise of the algorithms here. And suppose if you want to use anything, I would suggest that you do extensive trial runs and also you keep the algorithms running on the demo account for sufficient amount of time to get an idea of the efficacy of any algorithm, any setup. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Let's get started. Here there is a brief recap of what we have been doing so far. So on the 4 hourly chart, our major criteria has been that we should be trading with the trend, and for that we are going to use this 4 hourly setup on the awesome oscillator. And what we are going to do is that we simply want the positive values should be rising, so for that we are going to use the two blocks of awesome oscillator with shift 1 and shift 2, and we want to make sure that shift 1 is higher than the shift 2, that is the candle which has closed immediately, just the last candle should be having a higher upward momentum than the candle which has closed prior to that. And if the momentum starts to subside, if it goes into a consolidation phase or any kind of hint that a reversal is imminent, we will stop trading. We will not be going into short sale. We will go for short sale when there is a total reversal on this indicator, and only when negative value starts to appear, then only we will be going for short sale. So as you can see from the chart, we are going to remain on the sell side for considerable amount of time unless there is a reversal of the trend. So here you can notice that we will start buying somewhere around 22nd, sorry, the 2 GMT of 31st January, and we will continue to buy till 6 GMT of 3rd of February. Then we will stop trading, and then we will start short selling from 10 GMT 5th of Feb till almost closer to the 2 GMT of 10th Feb. And then if the momentum is subsiding, we will stop short selling, but we won't be going into a buy trade. So whenever there is a major trend, this indicator will try to make sure that we are not trading against the trend and the underlying momentum is with us only. And if the momentum starts to subside, we simply stop trading, and only when the confirmation will be in place for the longer time frame, we will again start going in the same trajectory. So as you can see here that Euro USD has been in a downward spiral, and the indicator turned negative around 5 GMT of 12th month. So somewhere here, and since then it was telling us to keep short selling till 1 GMT of 16th March, that is this is the time, and then we would have stopped our system wouldn't have gone for any fresh sell trades after this. And not only this, we are of course going to use the hourly time frame also to make sure that on the lower time frame also we should be with the trend. So here also the same principle will apply. We will be selling only when the negative values are rising, and buying only when the positive values are rising. And apart from that, whenever the negative values are falling or whenever positive values are falling, we won't be looking for any fresh trading opportunity. So for that time frame, our algorithm will be just kind of idle, and in in a position in a position to keep looking for a fresh trading opportunity whenever the optimum conditions will arise. So let's take a look on our setup which we have developed here on the JForex platform. This is the Decoscopy Visual JForex platform, and it's pretty handy to build the algorithms even if we are not that technically efficient in coding. So if you are novice to a coding, I would recommend that you continue to work with the Visual JForex platform and get familiar with its working. So here we have defined this instrument subscription. We have done this to make sure that our algorithm is going to execute trades only on the Euro USD. Sometimes mix up happens if we have not properly defined this, and the position amount has been defined at 0 to make sure that there is no open or pending order on this in the system already, and only one trade is going to remain open at a time. This is the 4 hourly awesome indicator, and has been defined for shift 1 and shift 2. The SMs are going to be used. Fast period is 5, slow is 34, and these are values 0, positive, negative, positive, and negative 0. So let's get to work now. We will add further blocks, and we will try to see how to define the entry and exit. So the basic criteria has been that the positive value should be rising, or if it is 0, then the positive value should be greater than 0 for the prior candle. So we are going to define this using if condition, and then the next condition is that similar condition should be there on the lower time frames of hourly also. So this is how we are going to define it. Let me show you on the 4 hourly chart. So starting from the 1 GMT of 12th March, so this is here till almost here. Of course, this 4 hour our algorithm will not be looking for a sell, but till around 5 GMT of 16th March, our algorithm will be looking for sell. So in such a scenario, where the sell should execute is going to depend on the hourly setup, and for that we are going to use the combination of some indicators here. And as I said, that we are going to start trading after 1 GMT of the 12th March. So the negative values start to appear around 6 GMT of 12th March on the hourly scale. So this is where our system will start looking for short sale opportunity, and it will continue to look for short sale as long as the negative values are falling, and whenever the negative values will start to rise, we will stop the trading. So here till 18th of till 18 GMT of 12 March, the system will continue to look for short sale, and then next time around 11 GMT of 13th March, and then it will continue, and again somewhere here, and then there is no selling opportunity after this. So these are two instances when the algorithm will be looking for the short sell trades, and now we want to define it using our best of the techniques to make sure that risk is minimum for us. And one indicator which can be pretty handy to define the volatility also is ATR. So we will use ATR on the daily time frame to make sure that we are well aware of the current volatility, and we will go for pending open, maybe defining 10% of the ATR value from the current tick price. We will subtract the 10% of the ATR from the current value when we will be looking for a buy trade, and we will add 10% of the ATR whenever we will be looking for a short sell trade. So let's do that, and we will need to bring the ATR value here to make sure that you are getting the point. Here also we need to add the ATR indicator, and in the indicator it should be there somewhere in momentum. It's not in the momentum, maybe other. Yes, it is. The average true range, we will define it on daily time frame with shift 1, that is the value for yesterday. And the rationale is that whenever new day starts, if we take a current value in the initial hour, the volatility will be suppressed as the day is just starting and there is not much of a range in the initial hour. So for that reason only we use shift 1, and is going to be daily time frame. We will let it remain 14. We are not going to make any changes in that. We just want to make sure that shift 1 yesterday, and yes, it is almost default. We have not made any changes. Okay. And on the chart I will show you how it will work. Let me add the indicator here too. The ATR is here, and we will need to make it convert it into daily time frame. So this is the daily time frame ATR, and let me again increase the zoom so that numerals are better visible. These are damn volatile times, and as you can see that earlier the ATR was even below 50 pips, around 46 pips just a month back, and now the ATR is even above 100 pips, almost 110 pips. So it is pretty difficult for trading if we are not incorporating this volatility in our current assessment. So that's why, to make sure that we are well aware of the underlying volatility, we will be utilizing the ATR, and what it will do, it will simply calculate 10%. Suppose if it is 110 pips, then 11 pips will be counted and added or subtracted depending on the order type. So we are going to use this. So far so good. We are going to need the historical candle also, just to make sure that last candle has closed in our desired trajectory. Suppose if we are going to sell, then we want to make sure that last hour candle is in red, and if we want to buy, then last hour's candle should have closed in green, that is price was rising. And And also we will need to define the some criteria, some parameter which will limit our execution in case there is too much of volatile moves. And here info, we will bring in the historical candle, and what we will do, we will make sure that orders are being placed only till the current tick value is within the range of last hour's candle. So suppose if we are going to sell, we will be placing the sell orders as long as the last tick value is below the last hour's candle open, and if we are going to go for a buy trade, then the last tick value should be above the last hour's candles open. So that will set the floor for our order execution. And then we connect this here, and we bring in the shift one, as we are looking for a historical candle with shift one. It is bid side. Okay, it's a bit to make it more sophisticated, we can take the both sides also, no issues regarding that. We can add one more candle and make it ask. Bid side, and here we change it to the ask. We again make the shift as 1, and the default period we set it for 1 hour. Hourly. So this is the setup, our initial so this is the initial setup which we are going to need. Just let me check on the hourly chart to make sure that we have the tools to help us define the entry and the exit. So here, when the momentum starts to enter into a bearish phase, when the negative value starts to fall, we are going to look for a sell. So let me check when it will happen. It will happen when the 7 GMT's closing price will be less than the 6. That means our algorithm will start looking for sell from 8 GMT onwards, that is somewhere here. And after the candle closes, we want to make sure that order is placed on the higher side. So here the order won't get executed, but since our algorithm is going to continue to look for selling opportunities, I think it will continue to recheck for the order placement as long as the values are falling. But we want to make sure that that's not the case. We want to make sure that somewhere the order execution has to stop. And suppose if we allow the algorithm to keep placing orders till after this candle of 18 GMT has placed, that is somewhere here, that will mean that even after the rise starts, our algorithm will continue to execute the trades. To put a limit on this kind of situation, what we can do, we just go back in time and we will simply allow the algorithm to place orders during the initial 5 to 6 hours, and I think that should be a good enough window. Whenever the momentum is fresh, whenever the fresh selling or buying is coming in, the chances will be pretty high that we will be ending up in profit. So we go back in time, we bring in shift 6 and shift 7, that is the candle which have closed 6 and 7 hours back, and we simply check that at that point in time the momentum should have been inverse, that is the negative values, or if it is in positive territory, then the positive values, either the value should have been in positive territory, or either the value should have been in in an inverse course, that is the momentum should have been subsiding. If it is in the bearish territory, then also the negative value should have been rising to make sure that this momentum is fresh. So we go back in time and we will compare the shift 6 and shift 7's value, and we will put in the condition that negative value should be rising. Otherwise, what we can do here, since the values are in positive territory, we will make sure that the values can, positive values can be both ways, either rising or falling. We don't have to be so bothered. Most probably we will put in that positive value should be falling, since in most of the cases, whenever the momentum is going to change from bullish to bearish, the last few hours will be showing a declining bullish momentum. So we will, if we simply put in the condition that the value should be falling, that should be also sufficient enough. And if there was some retracement going on, then negative values will be rising, and that should also good enough. So for that, just to put a break on our algorithm's ability to go for fresh trades after initial movement has occurred, we bring in the historical candles and historical values for awesome oscillator. This is our bed, and we will need two blocks of awesome oscillator. So this is it. We change the default time frame to 1 hour, and here also 1 hour. Now look closely, this is the requirement for defining us the time period which is going to limit our algorithm's ability for placing trades for next 6 hours only. So here we put in the shift value 6, and here we are going to put in the value 7, and we will be comparing on the ongoing basis that the trend should have been inverse of what it is right now 6 hours back. And I hope you have got the point why we are doing this. Hourly time frame, it has been almost well defined, and yes, so that should be good enough for us to start adding the buy side and the sell side. We are also going to need the calculation blocks to carry out the necessary calculations using the ATR. So we will use the calculation expression blocks as well, and we will define the 10% of the ATR. So let us bring the calculation expression. For the time being, let it remain only 1. So here we will need to define a new variable, create a new variable. It will be double. So I think let me check the variable type of the ATR. ATR is int or ATR is double. Setting. We need to make sure that we are matching the variables type as we want to utilize this, and this is line double. So this is double, and okay, new variable will also need to be double. Create a new variable, and it is double. Okay, and we name it as minimum ATR MA. It should be there, and we place the start value at 0.1. So whenever we will multiply the ATR value by 0.1, we will get 10% of the ATR. So that is the logic behind this. And now let us take that value in here, and we utilize this for bringing in the ATR value. So what we have done, we have defined a new variable double with 0.1 as the input value, and we are going to multiply the ATR with it. So we do A1 into A2, and the result will be minimum ATR requirement. So we write it MATR. So here one variable has been defined. And as we are now running out of time, I think for rest of the development we will need to continue working in tomorrow's session. I hope so far you have been able to understand what we have done and the logic behind adding these blocks and the underlying idea of the execution. So it has been a fairly simple setup, but to make sure that the algorithm is working fine, we need to pay attention to the fine details and to make sure that no unwanted trades are executed. We need to do the necessary calculation and pinpoint the entry and the exit point, and that's why we have been careful so far. So I hope we will all, you and me, will be back for tomorrow's session. Thank you again for joining in. Have an excellent time ahead. Goodbye.